Good morning, ladies. Thank you for joining us this morning. I can see the names coming up as you enter the room. Thank you so much for making the time to join us today. Today, we've got a webinar, part 2 of our Dealing with Business Finance in Times of Crisis. We are so lucky to have 2 accounting experts. Both are certified women business owners within the We Connect Business Network. So I'm going to hand straight over to Shamel Fleming, who's our moderator for today, and then she will introduce Ria Mafoko. Thanks. Over to you, Shamel.
Thanks very much, Jean. So, hi, I'm Shamel Fleming, founder of F12. With over a decade experience in multinationals, I decided to start F12, which is an accounting firm that assists businesses in managing their finances using cloud-based accounting. I have the privilege to introduce Ria Mafoko. Ria is a qualified CA. She's also a registered auditor and has gained experience in the financial sector and, like most South Africans, in the mining sector as well. Currently the CEO of Talana Chartered Accountants. Talana is a company that believes in combining long-term relationships, a problem-solving culture, as well as a drive to simplify finances to offer clients a very unique service offering. Before I hand over to Ria, I just want to touch base on some housekeeping issues. Everyone is currently on mute. And if you have any comments or questions, please pop them into the Q&A section. I'll be managing that. And then as we take breaks during the presentation, I'll ask Ria to just answer them. And with that, I'm going to hand over to Ria. Thanks very much.
Thank you, Shamel. As Shamel noted, my name is Ria from Talana Chartered Accountant. Welcome, ladies. I hope we'll be discussing dealing with business finance in times of crisis. Part 2, last week we spoke about SARS-related issues and funds-related issues with Shamel. So this part will be discussing financial management for business and for individuals, looking at cash flow management and cost cutting in liquidity analysis. And you might think that this might be a technical webinar. It's not. I'm making everything as basic as possible. And we'll be reviewing the impact of the shutdown on your finances, including some actions and examples, and not forgetting how your accountant can assist. And we'll be starting with that. So I can imagine a lot of you feel like the picture that's on the screen, especially where you don't know how everything will be turning out. We thought after lockdown, everything will be back to normal. And it does not seem like it. And it seems as if there will be a new normal. And hopefully by just going through this presentation, a little bit of anxiety will be lifted off your shoulder. So I'll be starting with understanding how your accountant can assist you. And I'm aware that some business owners, they do not have accountants, and we'll be dealing with that as time goes on. So if you look at this, the first thing that you need to look into is not only think that your accountant must help you only on compliance, but these are the tips that I have put together to say, you know what, things are not the same. So you need to ask your accountant what else can they assist you with. So the first one is assistance with applying for loans and all the SARS-related payments, deferments, and just the understanding of it, which Shamel explained and discussed last week, and finance-related issues like cash flow management statements, which I will be discussing later on, and operational-related issues, and service and product repositioning. Not forgetting that some of us might have a little bit of time on our hands where we can just keep our records up to date and just catch up on the likes of the annual return, QuiDA tax returns and financial statements. Please do not wait until you are on the red before you take action. I think sometimes our problem is that we are always chasing after what is, like, for example, where you always have to look at what is breaking so that you can fix it. We need to be proactive. And your accountant should not only report on the past, but should also provide the present and the future financial information, and use that information to analyze what might happen in the future, or for you to make better decisions. And my next part is the checklist for compliance documents. As I said, we need to make sure that we are up to date, but being being up to date, and you'll be getting new tenders, for example, or registering with new companies, what we need to do is to make sure that our checklist for compliance documents that I've put together is all up to date, and just going through it. For example, the information sheet, which is just all the information for your company. Your director's ID should be certified, CIPC documents, and which I will explain later. Bank confirmation letter, which normally they want within 3 months of being stamped, and corporate profile, the tax PIN, which obviously the tax clearance certificate has been discontinued, and proof of VAT registration, which some of the corporates will need it when you are enrolling with them or registering as a vendor, including PAYE and UIF proof of registration, and not forgetting the BE certificate or the affidavit. Please note that I've just put this so that it's just a checklist for everybody to just go through it and say, do I have this? Do I not have this? How do I get this? So that you don't have to get to a point where now you are running around like a headless chicken trying to figure out what other corporates need. So the next one is certified copy of company registrations, which is share register, share certificates, COR 14.3, which is the registration certificate, notice of incorporation with the initial directors, and memorandum of incorporation. And memorandum of incorporation is basically the duties and the rights and the responsibilities of the directors and the shareholders. Then the last 3 years compiled, audited, or reviewed financial statements, not forgetting the management accounts. The reason why I put types of insurances is I've seen sometimes when corporates would ask for, they will ask for proof of professional indemnity insurance. So all the types of insurances within the business or your industry that you will need, you just need to make sure that you've got it. And letter of under a good standing for UIF and for QuiDA. So now this part, we're looking at softwares, accounting softwares that you can use. And please note that they are cloud-based. These softwares, some of them that are easy to use for a business owner. And this is where it comes in, where you ask yourself, where do I start if I don't have fees or like cash, like enough money to pay my accountant? So I'll start with the free ones, which the first one is Wave and EasyBooks. Wave and EasyBooks, they are free. You just need to make sure that you check into the security for these as well. I'm not saying that they are not secure, but normally sometimes when things are free, you just need to be aware of other security or information, like your security of your information. And what they do, what Wave and EasyBooks does, you can raise invoices, you can allocate all the payments. It's quite easy to, it's user-friendly. Then the next one is Xero. Xero is on a more complicated level. As much as, okay, let me not say more complicated because you're gonna think it's complicated. So it's more on a complex level where it has some profiles that are not included into Wave and EasyBooks. For Zero, the nice thing about the top ones, Zero, Sage, QuickBooks, and Workday, the fees range from 35 Rand to about, let's say, 300 Rand per month. And the support on all of those are quite great, because even if you're not aware of what needs to be done, you'll be able to get to a point where when you use support, it will help you to get everything going. Then the last one is TaxTim. TaxTim, it assists you on the compilation and the calculation of all the tax-related issues. So in terms of that, I will take over to Shamel to ask if there's any questions that were raised.
Thanks very much, Ria, for this. We don't have any questions on the Q&A section, but I just want to make a few comments on what Ria has said. I think it is so important that an accountant becomes part of the extension of your team, and it is not someone that you begrudgingly play once a month, and that we really foster that relationship that we have as business owners with accountants, and that they are really just an extension of your team. And just to add on to the software packages, once lockdown is finished and we are open for coffee breaks, that is one of my favorite topics to discuss is cloud-based software. So I think it's a conversation that we need to have with as business owners, as accountants, is what package works best for the individual and for the company. And here's just one question that's popped up. So the question, Ria, is that you said that the tax clearance certificate has now been discontinued and that you use the tax spin that's been introduced. I know I touched on it last week, but do you just want to take the question as how the system used to work and how we are now managing tax compliance?
Sorry, Shamel, say that again.
Sorry. So the question was, you said that tax clearances has been discontinued, and that there's now a PIN that's being issued. So I think if you could just touch base on how the system used to work and how the system is currently working.
Okay. So before, it has been discontinued from last year, 2019. So before, you used to have the option of printing out the PIN and the tax certificate. So the tax certificate, what it would have is just the good standing or the tender portion as well. And it had all your tax types and the names or the numbers of your tax types. So right now, what they did is that the difference between the certificate, it gave you a year to say that you are valid. So SARS, they noticed that within the year, like let's say the next coming 12 months, a lot of companies, they only go back to the compliance or making sure that everything is up to date every 12 months. So hence they put the PIN option in and discontinued the certificate. So the PIN, what it does, it gives whoever's gonna be looking at your tax PIN certificate, then they can punch it on the system, and it gives you the status as at that day. So which means every single day you need to be compliant. And so basically every single day you need to be compliant, and moreover that you need to make sure that, for example, if yesterday was the 30th and you haven't submitted everything, the next day you might not be compliant. I don't know if I've answered your question properly.
Yes, I think that was covered. Thanks very much. And just another question is, which software do you recommend?
Okay, let me just go back to the softwares.
Okay.
So Wave is very, very basic, and there's no fee, so I would recommend Wave. And if you are more on the complex side where you need something that has more, like let's say journals, and I don't wanna, the thing is that Zero, for example, it was designed for any person. It was designed for a business owner and accountant. The Sage part is, originally it was designed for accountants. That's why when you get into it, you'll see the debits and the credits. So it can be a bit intimidating. But with Zero, it just shows you pay, you know, this is receipts, this is payments, and all of those. So in terms of just the basic one, I would recommend Waves and Text Team for text submissions, and Zero for more complicated type of work.
Thanks very much for that, Ria. So we don't have anything further, so you can continue. Thank you.
Okay, thank you. So this is actually one of my favorite. I've been doing this with all my clients, and it's not, as I said, I am not going to talk anything about like anything complicated. I'll make it as basic as possible. So the first part we'll be discussing is the cost cutting. So now, basically, I'm going to give you the steps of how you need to go through the cost cutting and go into the cash flow management side. And I'll give you practical example and the template, we'll be working on it. So the first thing is take your management accounts or print out your bank statement for the last 4 months. So the last 4 months, which would be December 2019, January, February, and March. Then with that, you literally take a spreadsheet. I've just put in the spreadsheet on the slides. So you take the debit orders or expenses that you pay on a monthly basis. So if you've got a loan repayment, like let's say this is mainly for business, right? So you take this, you go through the bank statement, you highlight, all you need, even if you're not good in it with Excel, you can just write this on a piece of paper. So on the side, you say, okay, this is the loan repayment for the company car. This is the loan repayment for a credit card, you know, and you put in any computer expenses or subscription. So in terms of water, electricity, you put it there. Hiring of any equipment that you've got, you put it there. Any type of insurance, you put the debit orders on the monthly basis, the way that I've put in. Accounting fees, everything, you just put it there. Then the next part is to analyze each cost and which ones. So now you need to ask yourself, which ones do you need? So going back to my example, you go through the loan repayment and say, okay, what can I do to minimize that 12,000 Rand or to lower the 12,000 Rand? You need to now write, for example, the bank and call the bank or write an email to the bank to say, please, can I have a repayment relief, or what other reliefs are there that are available? Including, let's say, for example, if it's like your domain, which is 97 Rand, you can just leave it. Now, when it comes to water and electricity, there's nothing that you can do about it to a certain extent. And hiring of equipment, you can call, let's say it's a printer and it's at your office. You can call the printing company and say to them, listen, I'm not using that printer. What other things that you can assist me with? We need to make sure that we take action. We can't just wait for somebody to come and say, this is what I'm offering you. The next one is like, for example, insurance. All the insurances that you've got, go through them, go through the policies and say, okay, I've got, let's say, company asset insurance, but you are not at the office, or let's say it's a car insurance, a company car insurance, but the car has not been moving. So right now you need to make sure, or used. So right now you need to make sure that you call the insurance company and say to them, the car is not moving, it's not mobile. What else can we do about that? And I'll give an example. One of my clients realized that they had some line, you know, the insurance policy, it has like Sazria, all the type of insurances. Go through them and ask them, what is this? What is this? Because before you just tick the box and just say, I've got the insurance. Right now, you might be over-insured, or as well, like let's say for cars, you might have only reviewed your premium or called the insurance company about 2 years ago or the time that you had it. And the value of that car is not the same as the time when you had revalued. So you need to call them and say, not only to say, okay, the car is not mobile, but to also say to your insurance company that I got this insurance for the last, let's say, 2 years, and the value has gone down. Can we just lower it? And most of the insurance companies, they are doing that. And the next one is the employee tax payables. So that is including any, for example, relief that you have, SARS has put in. So now you do the calculation, you put it there, because obviously that you can't really go to SARS and say, can we have a payment deferment? But obviously it will incur interest and penalties. So you just need to compare the relief that SARS has given us and the deferment one. Then with your accountant, call them and tell them, listen, I've got a problem of cash flow. Can you give us a relief? What I've done is I've given all my retainer clients 30% discount from April, May, and June. And the other thing is that we can't think that we are only victims. We need to also give out something. We can't always be the ones that are receiving. You need to ask yourself as well, like, what can you give your clients? It doesn't even have to be monetary value, but it can be maybe a guidance or some service that you'll be offering them for free. And office expenses, obviously that one, most of us are not going to the office, so that might be zero. Any rental, you need to call your landlord and talk to them. If you've got any issues, that's where you have to consult a lawyer. But the other thing is that you'll find out, like, for example, where my office is, the landlord said, we will give you 3 months relief, but we're going to extend it with about 2 years. And for me, that is not working for me, because I just thought I'll be locking myself up for 2 years. So you need to make sure that whatever that you are choosing, it works out in the long term. So it's not a matter of taking a short-term problem and putting on with a long-term solution. So you need to just be careful of that. So the other one is, I've heard some clients where they say, listen, I'm not really operational right now. I'm gonna just suspend my telephone line, or anything that it helps out to decrease the cost and to cut, and obviously the security side and subscriptions. I've just put in some examples. From your side, you have quite a long, probably a longer list where you have to go through it. So as I said, analyze each cost and look at the cost versus the benefit. And obviously you need to now look at the discretionary spending and contact the suppliers, ask for discounts, or change the service, or you can terminate. Insurance, look at the policy, as I said. Rental payments, see other alternatives that you can put out there. And sometimes some people, they don't even know what to offer you. You can say to them that, listen, how about we do it like this? Or you say, listen, for example, your accountant, you can say, our service has been like this. How about I do this and this and this, and then you'll take it over from me at this level and lower the fee. So after the cost cutting, we need to look at the cash flow statement, and you need to make sure that the right timing is key. You'll understand what I'm talking about, because I'm showing you right now, I'm showing you the cash flow statement. This is an example of what a template that I've put together, and we will be going through the Excel spreadsheet so that it's easier for you. I don't know if we can see it. Shamel, can you tell me if we can?
Yes, we can. We can see it clearly.
Okay. I think it's just disappeared.
Okay. While Ria is getting that back on, I think it's so important as business owners. We're sometimes scared to ask, engage with our suppliers on whether we can get extended payment terms, or whether we can get a discount. And I think now is not the time to be scared. All they can say is no. So I think we should review once we've gone through the exercises like you recommended, really engage with our suppliers and see what cash we can free up for the coming weeks and months. Thanks, Ria.
Okay, thank you. So this is an Excel spreadsheet. Simple. I've just put a template together. I've done it in a weekly basis. So you'll see week 1 until week 4 and then June going there. As you can go on, you can do like the next 12 months or 6 months, maybe the next couple of months you can do it per month instead of weeks. And so you start, it's a simple one. You start with how much you have in the bank account. So today, how much do you have? Let's say you've got 100,000, and from there you put in what is in the money market account. So it will calculate that today, as at the beginning of the day, you've got 120,000. So now you say, okay, this week, how much am I expecting of sales? And how much am I expecting my customers to pay me, right? So that's when you put the amounts and it adds it up. Then it says, without any money coming out, how much would we have by the end of the week? That's where it says 470. Then from there, you go through all the expenses that we discussed. You put them here and you can put every single amount. So make sure that you don't put, for example, something that you're gonna pay at the end of the month in week 1, because this is a flow, it's flowing. It's literally showing you the flow of your money. So if, for example, your expenses this week, it is, let's say in total, it is 120,000, right? It will show, okay, you've got the total of 120,000. Then you pay, let's say you had some payments that you need to do this week. So you put them in, you say, okay, loan repayments. Remember, this is not about if something is an asset or an expense. It's not, this is not an accounting process. It's not what is a balance sheet, what is income statement, what is expense. It's just literally how your bank account will look like in future. So I always say, if our parents and our grandmothers could budget for their salaries, for our education and groceries and everything, we can do this as well. So you put in, like, for example, creditors. So if you need to pay your creditors in, let's say in week 4, you put it under week 4, and then let's say, for example, loan repayment. So it all adds up there. Then it will show how much you have at the end of each week. So you can see, if let's say you had maybe creditors repayments of 300,000 altogether. Okay, let's say 350 altogether. It shows that you are in the red. And anybody, this will be available, anybody that would like this template, please don't hesitate to tell Jean or email myself. And it helps you because then you can go back and say, you know what, creditors repayment, oops, you know what, we've got a problem. I need to sort out something somewhere. And if you got, maybe let's say some of the creditors said, you can pay us later. Then you say, okay, I've got 18,000 Rand. And now you go back again and say, I'm starting with 18,000 Rand. If my sales for this week is gonna be 50,000 Rand and I'm receiving 650 from customers, this is how much it's gonna be. If you're receiving 60,000, you list it there. You don't have to even just put amount, just the whole amount. You can insert the name of the customers here, even the creditors at the bottom. Creditors meaning the people that you owe. So when you come down, you'll realize that, oh, I've got 120. So it helps you, it's easier because also it helps you to understand what will happen and what you can do, to what decisions you can make, instead of just making decisions by fear or because you don't know what is going to happen. So rather have informed information to make informed decisions. So right now with that, we'll be getting into the part where we are asking questions. So Shamel will assist me with that.
Hi, thanks, Ria. So thanks for the engagement on the Q&A in the chat. The first question is that the relief that the government has given to small businesses is really tax-free loans. So the question is twofold. Are they worth applying for, the loans from government? And at what stage should a business owner start looking at them? So that's the first part. That if you could answer that, Ria, that would be great.
So you're saying, so basically you're saying that at what stage can businesses ask for the loan?
Yeah, at what stage should they start looking at it? And is it worth it for small businesses to apply for these loans?
You know, unfortunately, a lot of people thought when the president said there is funding available, a lot of people thought that it will be the same as food parcels, where we all line up and get the money in a box, or you know. But the fact of the matter is that they couldn't do that because at the end of the day, people will not be using the money properly. So some of them, even if it's interest-free loans, you need to, let's say from the cash flow statement that we just did, you need to ask yourself, what benefit will the money get you? Like, what benefit will the loan assist you with? So if, let's say you have let's say you got a loan from them for 500,000 and you know that you'll be using it for revenue generating, I think that's much better. I don't believe in only just, let's say you've got an expense and then you just take that loan. It needs to get to a point, and it's not a, you can't do a general statement on it. It's case by case, because if you look at it, if you get the loan and then you're going to buy stock, or you're going to assist yourself, it's going to assist you in terms of services or pay employees for services, it's better. But if you can see that, for example, I'm a restaurant and I've closed and I have not even looked at repositioning my services, which I'll discuss later, and you just want to take it and it's going to be water down the drain, it's not going to assist with it going forward. So it will be pointless for a person to take a loan, and it's not going to keep the business, it's going to only keep the business afloat. And then the next thing, what now? Because you'll just be in debt and then no revenue, nothing. So that's that's what I think.
Thanks for that, Ria. And there is really no easy answer to these questions. And I think we've got to start asking ourselves, you know, the difficult and uncomfortable questions. Then Ria, after we moved off the previous section, there was just another question, and I'll just take you back to that. So okay. The comment was that there's a business owner that currently uses Sage Payroll to run their payroll, as well as Wave. And the comment was, should they use both, because she's currently using it? So yeah. So the question
they're using Sage Payroll and they use Wave.
Yeah. So Wave.
Yeah. So does Wave have payroll as well?
No, not that relates to South African taxes.
Yes. So now it will be better if they just keep this, because you need to make sure that whatever software that you use, you need to make sure that the currency is right. You don't want to be trading in dollars and sending your clients dollar currency invoices, and also just to make sure that the tax implications are aligned to Sage, to SARS or South African regulations. So I would say that rather keep Sage Payroll, and then there's also like other payroll related softwares that you can look into, and then use Wave for just invoicing and more on the accounting side or the finance side.
Yeah, I've got to agree with you on that. There was a comment on the chat that the presentation, so the question was regarding the presentation and the template. That will be distributed to everybody that has joined at a later stage, and that'll come from the We Connect office. So that's all that we've got on the chat and the questions and answers. So if you can take us through the next section. Okay. Thanks, Ria.
Thank you. Okay, so the next part is the debt consolidation and cancelling. So The debt consolidation is basically taking all your debts and putting them together as one. And putting them together as one. Sorry, I just need to move this quickly. Sorry, yeah. So the debt consolidation is taking all your loans and your debts together and then putting as one. As you can see the picture on my left. And so it locks, most of the companies, what they do is that it locks the interest on your loan with a fixed interest rate. And some of them, they can have less fees and loan repayments can be lower. Because you know that most of the time, let's say you've got 5 loans, most of them, they've got bank charges, they've got admin fees, they've got interest. So if sometimes it can be easier to just consolidate the debt, and it will also help you in improving cash flow. And please make sure that you check if the interest, compare the interest of all your debts, compare it with the consolidated debt, because it works for, depending on what company you've gone to or which institution, it helps you, it will be advisable to look into the interest that you had, let's say for the car, for the house, and then when it's consolidated, how is the interest rate? Because sometimes what they do is that they will say, okay, let's say your interest rate was average of 10 on the individual loans, and then on the consolidated one, it can be 15, but the repayment terms can be longer. So it will take you, like, let's say the next 5 years. So instead of the other debts taking you 2 years, so you just have to sort of like compare the two and not just jump because it's just a lower repayment term. Then the other one is the debt cancelling. A lot of people prefer the debt cancelling, which is just trained debt counselors that help you with your debt problems and how to design the debt repayment plans or negotiate with your creditors or any person or loan lenders, so that you'll be able to afford your monthly debt obligation. This is something worth looking at, especially when you are already sort of like seeing that things are not going to work out properly. And ladies, please, please, please make sure that you do not wait until you are in the red. Nobody wants to help businesses that are already in trouble. I mean, it's life. Life is like that. When you see potential, you want to help, but when somebody is already in the red, it's very difficult to see the light at the end of the tunnel. So if you think that your company will be sort of like in the red in the next, let's say 6 months, start knocking and finding out all these information that we are giving you. So with everything said, I've got a couple of questions that you need to ask yourself. Some of them I don't have the answers because it's normally like let's say on a company basis by basis. I can't, if I say some things I can't really say to you now because I wouldn't know the background. But if you ask yourself these questions, then it helps you to sort of like make better decisions. So the first one is solvency. And yes, it might seem like it's a fancy word, but it's literally just, are we going to be able to pay our loans? Are we going to be able to pay our debts? So now, where is the question being answered? It's answered through cash flow statement and profitability. So when you're looking at the profitability, the question is basically, whatever that you are investing in, is it going to give you a proper return? And when we look at that, we look at, now you need to look at the product or service profitability. Because let's say you've got let's say you've got 5 products that you're selling. You need to look at each product, how much profit is it making? If you are selling, let's say, laptop, a cell phone, a mouse, and a glass, you need to look at, okay, if I manufacture this laptop, what are the direct costs? And then including delivery. And you need to look at each one of them so that you can see that, let's say a mouse, it's not profitable. then you can discontinue that instead of making everything like the laptops carry the product of this mouse, for example. So pricing is very important, and please do not compare your competitors' prices without making sure that you are profitable. This is an example that happened about 2 weeks ago, where a client that just came in and said, I made a big mistake where I bought mask for 750,000, where the supplier had didn't have VAT and I did not check that, and then I sold it for 800,000. And that's where they made a direct loss of 54,348. And that is a true story. So you need to, desperation sometimes it makes us just jump and just see the money and not calculate it. You need to make sure that you calculate the VAT excluding or including on that. And again, you look at your asset utilization and maintenance. That talks about, like, let's say your insurance that we discussed. So how efficient is your asset that you have right now, and even going forward? Because people think that we are discussing this based on what is happening right now. But when you look at it, it's not about now. It's about going into the future as well, you know, and the liquidity as well. You need to get to a point where you try to delay payments with your supplier, negotiate with them, and get your clients to pay upfront as early as possible. Which of the most important driver of my revenue in my business right now, what is it? If, let's say, whatever that you needed to give, that you were servicing, or let's say you were selling, it was giving you, it has been stopped right now. You need to get into product or service repositioning, which, for example, you find branding or events companies changing branding, like changing their product, their service into branding of masks and sanitizers. And these are the real examples that are going on right now. Then comes productivity in terms of how well are you managing the resources. So we're talking about employees. Are you maximizing the capacity? And you need to make sure that you include the employees in terms of other researches or service positioning that you'll be looking into. So the next part is financial management for individuals. Please talk to as a business owner, you can't just look at the business. You need to look at also your individually, your own expenses. Do the whole process that I had mentioned for your family as well. Talk to your financial advisor. Look at the available reliefs for vehicle loans, credit card debt, and bond. Same thing as the insurances that I discussed, the car insurance, the home insurance. Look through it. And right now, some people can say, you know what, I've got a little bit of money, I can buy a house, because with rental, it's just money down the drain. So you need to look into that because the interest rate has gone down. Look at where your medical aid is. Maybe you can change a little bit of that. Look at data versus fiber. You need to make sure that you take action now. And please don't give up, just be persistent. So the general tips on this is brainstorm with other entrepreneurs. Please make sure that you don't sit by yourself and try to figure out what is what. Some of the things that I put in my business, it was coming from my clients. Talk to your clients as well. And as I mentioned, do not fix a fixed term problem with a long-term solution. Get involved in online filing. The filing system is like the normal hard paper. It's just impossible now to do it because you have to share information with your clients, and look at digital marketing strategy for advertising. And please do not bombard yourself with lots of softwares and apps. You need to look at how the whole ecosystem, how do they interact with each other. And this comes from more of an operational side where you need to look at work from home agreement or working from home guidelines for your employees, and the safety of your company assets, and how your employees' working environment is. You just need to brainstorm with your employees with that. And just another tip that I always put in my slides is the small business corporation tax. So that is literally just an alternative tax where instead of paying 28% of income tax, there's a scale where, for example, right now it's 83,000 rand rebate on tax on net profit. So if your tax requirements are applicable for this, for example, your revenue is less than 20 million rand for the last 12 months, and you are a private company, and you only have shares in that company, not any other company, and also you're not a personal service provider, and your investment company that is not more than 20% of your revenue, then you can look into that. If you don't know anything much about that, you can ask your accountant or call SARS, and because you'll be saving a lot on your income tax. And with all these savings that we have looked into, I always advise my clients to have 3 bank accounts. One is a check account that you are operating in. The second one is the money market or a savings account where every time, let's say you just got money from a client, you put your VAT or you put your PYE, that's your savings for SARS. And the third one is just a money market account for your own savings. You might think that, oh no, it's too much admin. But if you've got 500,000 in a money market, like for example, FNB one, you get plus minus about 2,800 per month. I mean, that's a lot of money in a year. So Shamel, I don't know if we have any questions.
Yes, we do, Ria. So can I ask you if you could go back to your first slide on general tips?
Okay. This one.
Yes, so you had the second bullet says you do not fix a short-term problem with a long-term solution. Could you just give us examples of what do you mean by that, and just expand a little bit more on that statement, please?
So so I'll give you my personal example where I called the landlord and said, my employees will be working from home for a very long time, and cash flow problems, and how do we, what can we do? And besides the cash flow problems, even if you don't have cash flow problems, you need to be able to negotiate with them to say, I'm not using it, I'm not utilizing it fully. What else can we agree on? So with me, what happened there was that they said to me, we'll give you a 3 months a break where you're not going to pay your rental, but we'll be increasing your rental for 2 years. So right now, I don't know what's going to happen in the next 2 years, and I'll be locked with having an office space. Right now, I'm already thinking of how my employees can work from home, which they've been doing very nicely, and I think it will work going through. So if now I have this office space, my problem now is I'm not using the office space now, right? Which is a short-term problem, but they're giving me a long-term solution, because the long-term solution meaning I'll have to be in that office space for another 2 years, because they don't have the option of us just getting out of the rental contract. They want you to, if you say to them that I'm leaving now, there's no 1 month notice period. They want you to pay for the next 12 months. So I'm just giving an example of just look at now and in the long term. So don't if let's say you if let's say you have to move like from your house, I'll give you another, maybe it's stupid, but if let's say you have to move from your house and move in somewhere else, you would rent a bikie for that, but you don't want to buy a bikie for that. So it's basically that.
Very much for that, Ria. With interest rates decreasing, we had 2 interest rate decreases. How do we take into account when we do the projections that you did, the interest rates? Is it going to be like this for the next 3 and 6 months, and then it goes back to normal levels, or do we anticipate a decrease? So how do we, build in the flexibility with interest rate into our cash flow cash flow models.
Which interest rate are you talking about? Are you
So
talking about the
yeah, the prime interest rate on loans that the
okay.
company might have had
So
before.
with interest rate, I don't think, because I personally don't think that they'll be taking it up in the next couple of months. You know, I mean, right now they are even saying that it's a buyer's market. Interest rate has gone, it's gone lower. So sometimes it can be a bit complicated with you calculating, you know, for yourself. But I'll call the bank and say, listen, my bond was however much, how much is it gonna be, you know? Or you can actually call any person that any institution or people that have given you loans to give you a schedule going forward. You don't have to now, if you're paying 20,000 Rand per month, and then just keep it going. You need to go back and say, okay, can you give me a schedule for the next coming however months? So they'll give you a schedule based on the interest rate right now. Then you'll just put it on the cash flow. And the other thing is that let's not forget that, for example, some shares have gone down. People can start looking into buying shares. I'm not an expert in that, but you can talk to your financial advisor where you say to them, guys, this is like, I've got 50 Rand, what can I do with it? You know, even if it's like 20,000 Rand or something, you never know what, like if you've got extra cash, you can use that for other investments out there.
Thanks for that. And then here's one more question. It's kind of a loaded question. So businesses has seen a decrease in activity, right? Because of lockdown, and it's probably going to be like that. Is it now the opportunity to negotiate the reduction in accounting fees? If you can, as I said, it's a loaded question. So if you can, you can just help us out on that.
So a lot of people that are on retainers, it's mainly for they looked at, your accountants normally look at the workload and the services that they have given you. Let's say the retainer was 15,000 Rand and it had payroll. Normally they'll give you like what the services, the list of services. So contact them and say, okay, Shamel, I've let go maybe 3 of my employees, my payroll has gone down. My bank account, it has not been active as much as possible. So that has gone down as well. I don't want, like, for example, some people would say, I don't want management accounts every month. I need them you can give me the income statement and the balance sheet, but I don't want the whole management account every month. Or you can say, can you give me access to this information? So then with that, going through that, then you can negotiate, because unless if they come back and say to you that, listen, I'm going to add advisory services now. But as I said, an accountant actually is the one that actually sees what is going on, you know, so they need to, at the end of the day, say, okay, I'll give you a discount. As I said, we've given discounts to the retainer clients, 30% for the next 3 months. Yeah.
Yeah, thank you for that. And I just want to add to that, because you can use especially for clients that you've got on a retainer basis, is to make use of them to apply for all the funding as well. So because they are in a prime position to have all the documents ready and to submit, and would have done more than one application before. So I think, you know, have the conversation with your accountants and see what they can do for you during this period of time.
Yeah.
So Ria, there's no further questions on the chats as well as the Q&A. So I just want to say thank you very much for those that's joined in, and thanks for the participation online. We appreciate it. So yeah, so I'm Shamel Fleming from F12, trying to make sense of the crazy time with our clients. And thank you for joining. So Ria, over to you.
Okay, thank you, Shamel. Ladies, the fact of the matter is that we don't know what's going to happen. And I think sometimes we're being too harsh on ourselves. thinking that we should know all the answers. Can we not be too hard on ourselves? Let's take it a day at a time, and let's not be victims. We need to at least help out as well, and make sure that we go through things, as I mentioned, going through your cash flows and talking to other ladies. And over and above that, you need to discuss with your employees or other entrepreneurs in terms of how you can change your services or your products, or talk to your clients actually and say, what can we help you with? If you were doing something, let's say you were doing something else, they can ask you, can you help us with that? You need to now start using those relationships to work for you. And I hope this session really helped. I hope it helped you, and I tried to make it as practical as possible. And enjoy the rest of your week. Over to you, Jean.
Thanks, Ria. That was really, really informative. I especially liked the talk to your financial advisor. I think that's a really great idea. I never thought about asking the financial advisor to help with applications. That's amazing. And that'll be good use of the retainer. And I also had never thought about checking the insurance policy. So you're right, the business insurance could probably be reduced, even if it's just for the short term, right? So that for me, that was a big takeaway. The phone contracts have already started going through, and I've reduced some of our phone contracts. And I was surprised how easy it was to move some of them to pay-as-you-go contracts, which helps a lot. And I especially liked your point about brainstorm with other entrepreneurs. Especially here at We Connect, we really encourage collaboration and brainstorming with other entrepreneurs. And as you mentioned, you'd be surprised what information you get from other people. So thank you, ladies. We really appreciate your expertise and you taking the time out to prepare for this webinar. We will be sending out the slides and the recording. Just give us a couple of days to download, save, and then it'll be saved onto the We Connect Academy platform. So thank you, Ria. We really do appreciate you. And to everybody for joining. We appreciate you making the time to join us. My name is Jean Chawapiwa. I am the Country Director for We Connect International in South Africa. Thank you so much. Thanks. And thanks to Vanessa for all the organizing. We wouldn't be able to do this without you, Vanessa. Thanks. All the best. Have a fantastic day and stay safe.